Welcome to Trading Lounge and the US indices for January the 9th. And this is our primary count here, where we have wave 3 here, an A wave, a B wave, and then 5 waves down for the C wave here, which will be wave 1 and 2, and 3 and 4 here. And then we're still looking for one more move to the downside here. So we really need to have that top in place here right now. So we'll look at that in a bit more detail, because otherwise we will start coming too high here, and we'll need to consider this wave C here on this low here and already in place. But it's very difficult to count 5 waves all the way down through here. It can be done, and I've done it, so I'm okay with that, but I'd still need more evidence. I still want to move past these current highs here. So on the 4-hour chart for this, we're looking at it like this here. So wave 1 and 2 and 3, an A and a B and a C for wave 4 here, and then down for wave 5. So we've been looking for 5 waves in this little structure here. So I think that they're all in place now. So let's go in and have a closer look at that. So we have from the low here, we've got our A wave, our B wave, and our C wave up here. This A wave here can also be counted on this high here as well here, making this the A, the B, and the C wave here. That also fits. But I'm more interested in this little section here now. So as you can see, we've got a nice wave 1 here, wave 2, nice strong 3rd wave here, 4th wave here, and the 5th wave here is a little bit wonky, but it's certainly normally when the extension is in wave 3 here, then wave 1 and wave 5 will be roughly the same distance. So that's pretty close as it is. It's just that this is a little bit wonky, but if I had to count it, it would be 1 and 2 in here, and then nice strong 3rd wave here, 4th wave here, then 1 and 2 and 3 and 4 and 5 here. So that top really needs to stay in play here. So let's see how we go with that. If this market drops through here, any long trades that you have in here will need to be severed at this point here, but also turning short here as well. Now, this low to this high here, this is the medium level here, 2500. So this is going to be the support. It's also the 50 and the 61.8% retracement level here. So to add to short positions, you wouldn't really need to have this level here as a retested resistance here. Okay, so we've got plenty of time for that. We can talk about that when that happens. So this little high here, if we just go into the tick chart here, this is our count to the upside here on these ticks here. So it does appear from here we can count this down as 1 here and 2 here, and nice strong 3rd wave here, and a 4th wave here, then 1 and 2 and 3 and 4 and 5 for the 5th wave to come in here. It does appear that we've got 5 waves here. Yes, this market has moved up above its 61.8% retracement level from this high to this low here, so that makes it a little bit scary. But in terms of counting this to the upside, we can count this as an A and a B and a C here for the A wave, back for the B wave here, and then 1 and 2 and 3 and 4 and 5 for wave 1, back for wave 2, up for wave 3, and a sideways wave 4 here, and then up for wave 5. So we can count this as an A and a B and a C wave to here, having this high in here as well. So it's possible to short this through here too, I'd imagine through here, but you'd need, it'd be nice to see some sort of downward movement here. Of course, this move up here, the flip side of all this, can be counted as a positive move too. It'd be up for wave 1, back for wave 2, up for wave 1, back for wave 2, and this would be a 3rd wave up here, and this would be a 4th wave, and then a 5th wave here. So it can be counted impulsively as well, and taking out this high here would trigger that impulsive move to the upside here. And then we would need to recheck this this whole count here really. But going back to the 4-hour chart here, in terms of actually moving to the upside here, if this is wave 1 here, then we don't really want this market moving you know, into that space here. Because if it does that, then we need to be looking at other things. So, and looking at other things here too, if we took this top here from this low here, then we can see that we're currently right now into the 50-60% retracement level here, which is very high for a wave 4. We've seen it at 50 before. Normally we look for 40%, but at 50%, we've seen it before, so it's not such a big deal. But certainly if it moved up through to wave 1 here, then we would also need to look at this low being in place here at this time, and you know that we've got account for that as well. I won't go into that today. Let's just see if this high in here. We've already looked at the last video. We looked at the positive wave to the upside. So in terms of looking at the tech stocks, it's the same here as well. This move up here is a wave 4. It's in exactly the same situation, exactly the same sort of fifth wave up here. So an A and a B and a C here. So we need to be mindful about this developing any support on top of this medium level here, because you can see that it's a line in the sand here. So a nice tested support here would see a further trend to the upside. So we need to obviously take that on board there. So in this case here, we're looking at this too from the A, the B, and the C wave here, with wave 1 and 2 and 3 and 4 here. And once again, this is a little bit wobbly up through here. So, you know, I'm not quite sure, but I do know that if this low is here breached, then we need to be on the short side. We also need to get through the 6.3 here, which would be the 61.8% from this move up through here as well here. So let's just allow this dance to play out through here. But you know, I do understand that, you know, a low can be in place. So when we have a look at Amazon here for a moment, so you know, if we can't look at this as the fourth wave up here because it's already moved through the top of wave 1 here. So in this case, we can have from the top here an A wave, a B wave, and a C wave in place here already for this market. It's also possible too that even though we've got this as an A and a B and a C here, it's also possible that this, if I copy this here for a moment, an A wave here, a B wave up here, and a C wave over here. So this could still play out as another sort of corrective pattern within here, but just for the purposes of you know, highlighting other counts, this is certainly there. But the good news about this though is that this whole move down through here, we can look at it being corrective. So at some point in the future, we can expect new highs here. I don't think there's any other counts for this. Just let me check. 1, 2, and 3, 4, and 5. Still leave us with a corrective pattern there. Oh no, it wouldn't. Yeah, I mean, it's possible. Yeah, it could have this as, this can also be, I'll need to check this here. So wave 3 there, wave 4 there, and wave 5 there. So having this as an impulse wave to the downside and looking for a wave 2 back up here, or wave B, is viable as well. So it is possible to have this further out from this. But what I wanted to use this for today though is really just simply to explain that the current move up through here in those other two indices, you know, it's being breached by stock here, and it is the stock that create not just one stock, but it is stock that does create the reflection back for the indices. So we need to bear this in mind here. But we'll have a look at the bullish count again, perhaps in the next video for the S&P anyway. All right, just short and sweet. Let's just see if those tops for the NASDAQ and the S&P fold exactly where they're folding from right now. Okay, cheers.